Earlier this week, I was asking folks, does it make sense to start trimming some U.S. stocks? They've rallied significantly from the lows in October, up, nearly 17%. And here it is, Michael Burry saying, yeah, don't expect a short recession. Expect a potential multi-year recession because the Federal Reserve doesn't have the same tools that they had during the last two major downturns, talking about the great financial crisis and the dot-com bubble. At this point, I usually start getting some haterade from wackadoodles, commenting about like, Daniel, Michael Burry's just a one-hit wonder. Okay, if that's your view, I highly encourage you to get smart and research Michael Burry's track record, because the reality is he's one of the greatest investors of all time. And he not only called out the great financial crisis and made a boatload from it, but he also called the dot-com implosion and made a boatload during that period as well by investing in deep value stocks. So he is one of the greatest investors of all time. If you don't think so, I recommend you get a little smarter, maybe read a little bit more about what he's done. I actually check out some of his stock picks. And so he looks at things, in my opinion, from a really smart analytical lens. Does he always get it right? No. Does he have a more of a bearish slant? Absolutely. But I think fundamentally he's right. And the reason why he hasn't gotten it on a timing perspective is ultimately because the environment just gets more and more extreme. It's like, oh yeah, the Federal Reserve starts thinking, yeah, let's start doing $100 billion a month in quantitative easing. Yeah, if you have some sort of radical policy like that, that'll push out your expectations of when things will happen. And that's what we saw during this cycle. So it is worth understanding that. So what's Michael Burry talking about in terms of seeing multi-year recession right now? As I previously talked in my last video, there are some structural forces at play, such as a tighter labor market and also tighter commodity market, particularly looking at oil, that could make it very tough for the Federal Reserve to consider lowering rates, because you might be in a period of sustained high inflation, or at least inflation that's stickier, that makes it harder for the Fed to stimulate, in which case it's harder for you to see a really strong rally in equity. So I sort of wonder, here it is, the S&P now within 15% of its high. Does it mean it's time to short? Doesn't mean if it's time to sell. Now, I personally, don't short individual stocks, but Michael Burry is saying, I am not short. And he said that shortly after I posted the video. Maybe he's an Unrivaled Investing viewer. Who knows? And so this makes folks wonder, like, well, wait a second. What's this mean? Does this mean he's actually bullish? Because I also previously called out that he'd recently started buying some stuff. And so I think it's important to understand something here. I think what he looks at is he looks at asymmetric bets, and that's the way every investor should look at it. You never just want to buy something that's a coin toss. Like if it's a coin toss probability, 50%, you lose 100%, 50%, you have a good return. You want to ask yourself, well, wait a second, if it's a good return, how great of a good return it is? Maybe you could stomach losing 100% on an investment if the payoff is like 20-1 or 100-1. And arguably that's what he looked for with the great financial crisis. That's what he's looking for with a lot of these cheap stocks trading at low multiples to free cash flow. And so he's looking for asymmetric bets. And I think maybe what he's saying is that he's not seeing asymmetric short bets. Now, does that mean he's a mega bull or anything like that? I don't think he's bullish on US stocks. And I'm going to talk about what he is bullish on in just a second. And so what's interesting, or at least what he just posted, as I was making this video, he made an announcement. So I think what he's effectively calling out, effectively saying, hey, the US might be facing a multi-year recession, is it's not saying, hey, this is an endorsement for US equities, because he's called out how US equities have faced a very tough path. And he talked about the challenge that the Federal Reserve is in. So I don't view this as, like him saying, hey, buy US stocks. And you look at his portfolio, and he only owns, like 40 million, something like that, of stocks in his portfolio. His total assets under management are hundreds of millions of dollars. So it's very possible that he's making a bigger bet on international stocks. And this is, before you start thinking about any of that stuff, take a second. The whole purpose with investing, find exceptional companies and try to pay fair value or try to buy at a discount. That's really what you're looking for. That's personally what I'm looking for. So no matter what Michael Burry says, short, long, mega bull, I find it interesting, but what I'm doing is look case by case basis. And I call out to what I'm buying and selling to my subscribers at unrivaledinvesting.com. I'm looking for the long-term compounders, the companies that have proven themselves over a multi-year, multi-decade perspective, and I'd like to buy them on sale ideally. For example, one of my largest holdings is compounded at 18%, roughly for several decades. And here it is, it trades at a significant discount. That's the type of setup I'm looking at, and you could see that with several of my top holdings. And so that's arguably what you want to find, something that's proven itself. And here it is, him saying not short makes you wonder, like, well, does this mean risk on? I don't think so, because once again, he's not deploying a lot of his capital in US stocks. What does it mean for investors? What should this sort of mean? Well, just moments ago, as I was preparing to make this video, he posted, yeah, as for me, I like Hong Kong. So he likes Chinese stocks. Now that is very interesting. Now I think, once again, important to take. I personally like to do both a micro perspective of like what drives this company, as well as a macro perspective, because I think both perspectives are important to understand. Believe me, I absolutely, have a strong respect for Warren Buffett, Peter Lynch, the investors that are focused, and I have a picture of Peter Lynch over my shoulder, the folks that can focus on individual companies. But I'm also aware that you have periods also over my shoulder, Lords of Finance, a period where the central bankers can control the outcomes based on arguably either their stupidity or hubris, where you see extreme outcomes because of what central bankers do. They either overreact or underreact to certain dynamics. A lot of folks, in my opinion, for example, the Great Depression wouldn't have been as bad if Andrew Mellon wasn't there as Treasury Secretary at the time, because he was busy thinking about, hey, how can I enlarge my art collection? So that's a whole separate other aspect that folks don't realize. He had a mentality during the Great Depression of like, hey, he's sort of a survival of the fittest mentality. It's good for these banks to get wiped out. Maybe my own bank that I start, that I own will get bigger because of it. So it's important to understand these dynamics. Like, bankers have a huge impact that no matter how great of an investor you are, if the underlying macro is horrific, it can dramatically hurt your returns. It's important to understand. So what is sort of the macro that Michael Burry might be looking at? Him effectively saying, hey, I like Hong Kong, which, the Hong Kong exchange trades a lot of Chinese equities. I've called out how the Chinese ADRs trade on the Hong Kong exchange. I've personally bought, when I've bought my Chinese stocks, I typically bought them on the Hong Kong exchange using Interactive Brokers. Link below to Interactive Brokers below, because that's one of the easiest exchanges to do it. There's a lot of investment platforms that don't even allow you to buy foreign stocks for, let's say, your retirement accounts, like a Fidelity of the world. And so why is he saying, hey, I like Hong Kong? Let's understand the macro perspective. So I think one thing to consider is that you're starting to see the People's Bank of China, they've been easing up. They've been facing multiple challenges between zero COVID approach and a effectively collapsing property bubble. And so you've seen them increasingly encourage some sort of stimulus. That is complete opposite of where we are currently in the cycle with the US. The US is still tightening. And by the way, we're still within 15% of an all-time speculative high where monkey pictures were trading for millions of dollars. So like perspective on like psychology. In China, you've had effectively a lot of investors wiped out or down significantly on their property investments or on various different Chinese stocks. You've seen some of them down significantly over the last year or so. And some of these are real companies generating lots of free cash flow, buying back stock. So he sees that they're in a different point in the macro cycle in terms of the bankers are easing. So then the next thing is, I think you're looking at the pivoting in terms of zero COVID, where now you had some protests, and now you're looking at the leadership sort of saying, hey, if you get sick, it's on you. We're not necessarily going to lock down anymore. We're not going to have this zero COVID, no tolerance approach. And that sort of reopening of the economy can be extremely good for a lot of aspects to the Chinese economy. You could see a lot of things benefit. We'll see how that plays out, because it's important to understand that their medical infrastructure is nowhere near comparable to what you see in some Western governments like the US in terms of what's the availability of, let's say, ICU beds and things like that on a per capita basis. And so that is a challenge of like, hey, you can't let COVID go too crazy, otherwise mortality rates will shoot up higher. And so we'll see how that plays out if sort of they're able to successfully pivot from a zero tolerance approach to COVID. But either way, that could be very favorable to their economy in terms of sort of getting some more growth there. So we'll see. I think the third component is looking at valuations. And I think that's another key aspect why a value hunter like Michael Burry, one of the greatest investors of all time, in my opinion, is talking about, hey, I like Hong Kong, is that, hey, if you can stomach the geopolitical concerns, which are many, I'm not going to say that that's a zero. That is many, and it's arguably gotten worse. The question is, are you being compensated for that with the current valuations, where you see some of the best companies in China trading? I've called out Alibaba several times, and you see Charlie Munger, with his ownership of it. And I've done videos on that, where you're paying effectively a low teens multiple on this. So this is, I'd argue, a very interesting data point when you see Michael Burry saying, hey, I like effectively Chinese stocks. I like Hong Kong. And so it does make me think, hey, you do see a potential rally from here with Hong Kong or Chinese stocks, unless the geopolitical situation flares up. You see either trade war or I really hope not, any sort of hot war flare up. But either way, I find this to be very interesting. This is effectively Michael Burry saying, hey, I don't want to short, because you never know how bad speculative spirits can get. He's not seeing the asymmetric short bet in the US. And maybe he's just like, hey, and by the way, it's not like he owns a ton in US, and the things he owns in the US aren't particularly optimistic. Like, hey, I own some prison stocks in the US. But by the way, he's buying Chinese securities because he thinks they're cheaper, and he sees that they're in a different point in the macro cycle. So you're cheaper, and you're starting to get the stimulus from the central bank, effectively from the government. So if you enjoyed this video calling out how Michael Burry's bullish on Hong Kong stocks, but not necessarily bullish on US stocks, especially because you see his portfolio not a lot committed to US stocks, like 10% or less committed to US stocks. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning into Unrivaled Investing.